All right, let's jump right in. Today, we are tackling a topic that sounds super simple, but is one of the most fundamental and trickiest concepts in accounting: what really counts as cash. I know, it seems obvious, but trust me, this is where a lot of students get tripped up on their licensure exams, so let's get this locked down for good. So let's kick things off with a classic scenario. Imagine a customer hands you a check. I mean, it looks like money, you can deposit it, so it's gotta be cash, right? Well, maybe, but maybe not.
And yeah, the real answer here is it depends. Understanding that little detail is what the CPA licensure exam loves to test. It's a favorite trap question. But don't worry, by the end of this, you're going to see that trap from a mile away and sidestep it every single time.
See, to really get this, you have to do something kind of weird. You've got to turn off your normal, everyday brain and switch on your accounting brain. Because how we think about money when we're buying coffee is just way too fuzzy for the world of accounting. Accountants need to be precise. Here's the big mindset shift you need to make. Forget what it looks like, whether it's paper, a coin, or just numbers on a screen. For an accountant, the only thing that really matters is its function. The big question is always, can the company use this thing right now to pay its bills? So to make this easy, we're going to use what I call the golden rule. Think of this as your go-to framework. It's not just about memorizing stuff. It's a tool you can pull out and use on any item to figure out exactly where it belongs, whether you're in an exam or on the job. Okay, so let's get official for a second. The textbook definition says cash is currency and demand deposits that can be pulled out at any time without prior notice or penalty. The key words there are demand deposits and without penalty. That's the heart of it. So we can boil that whole formal definition down into a super simple two-part test. For anything to be called cash, you need a yes to both questions. Number one, is it unrestricted? And number two, is it immediately available for use? If you get a no on either of those, boom, it's not cash. Simple as that. So what does unrestricted actually mean? Well, this quote nails it. Restricted cash is money that's been walled off for a specific reason, like say it's being held as collateral for a loan. You can't just dip into it to pay your rent. Because of that, it fails part one of our test, and it has to be reported separately from your regular cash. All right, now for the fun part. Let's take our golden rule for a spin and start sorting. We'll start with the easy stuff, the things that are pretty much always going to be cash. Let's start filling up our cash bucket. Okay, so what goes in? Well, you'll see everything on this list easily passes our two-part test. Coins and currency? Duh, totally unrestricted and available. Petty cash? It's literally cash in a box for immediate use. Your checking and savings accounts? I mean, they're called demand deposits for a reason. And things like bank drafts and money orders? They work just like a guaranteed check, so they're good to go. Okay, now for the juicy part. This is where those tricky exam questions live. We're going to look at the stuff that looks like cash and kind of feels like cash, but totally fails our golden rule. These are the items getting kicked right out of our cash bucket. First up, the all-time classic trick question. A customer gives you a check today, but it's dated for next week. You're physically holding it. So, is it cash? Let's run the test. Nope, it is out of the bucket. And why? It completely fails the immediately available rule. You can't do a thing with it until that future date hits. So it's not cash today. It's just a promise to get cash later. And in accounting, what do we call a promise to receive cash? That's right, it's a receivable. Okay, what about this one? You're counting the petty cash, and you find a little slip of paper from an employee that says, I owe you $20. Is that piece of paper the same as a $20 bill? No way. That's getting kicked out too. An IOU is just a note. It's a formal claim against that employee. You can't go to the store and buy lunch with it. So just like that post-dated check, it represents money you're owed, which makes it another receivable. All right, here's a sneaky one. Your company has a bunch of postage stamps. They definitely have a dollar value, and you use them to pay for postage. So are they cash? Nope, these are out. This one's a little different. Sure, they have value, but they are not a general medium of exchange. You can't pay your internet bill with stamps, right? Because they're for a very specific future expense, they get classified as office supplies, or maybe a prepaid expense, but definitely not cash. So let's put it all together in this handy little table. Think of it as our cash sorting hat. You've got the item, its proper classification, and most importantly, the why. Seeing it laid out like this really helps cement the logic.
Notice how every single decision traces right back to our golden rule.
Now, we've walked through the logic, but I want to give you something practical you can use for your review. This next part is your high-value study hack. It's designed to help you lock this knowledge in your brain so it's still there when you're sitting for your board exam.
Okay, this is it. Get ready to screenshot this slide because this is your go-to summary. We've got it all boiled down. On one side, your always cash items, no-brainers. On the other, the never cash items. These are all your common exam traps. Seriously, just drilling this list will build that muscle memory so you can answer these questions automatically on exam day.
So here's the bottom line. This isn't just about some tiny detail. Mastering this simple rule is huge. For one, it saves you from losing easy points on the exam. But even more important, it builds a rock-solid foundation for all the more advanced accounting topics you're going to learn. If you nail this, everything that comes next gets just a little bit easier.
And finally, let's just zoom out for a second. The whole idea of money is changing, right? We've got crypto, digital wallets, all this new stuff popping up. So the big question for you as a future accountant is, how will our definition of cash and our golden rule hold up? What new assets are going to challenge this definition? It's some food for thought as you start your career. Thanks so much for tuning in.